Hi there, my name is David Reside, and this is Developing Carbon Stories, a podcast about the project developers creating the most innovative and impactful carbon projects in the world. Developing Carbon Stories is a project by Abatable, a carbon intelligence and procurement platform that helps companies purchase high-quality carbon offsets. Each episode, I speak with an entrepreneur from a different part of the carbon ecosystem and talk about their journey so far and how they are acting on climate change. On this episode, I'm speaking with Edit Kiss, the Chief Investment Officer at Revalue Nature, a global project developer working to scale high-integrity, nature-based projects. They provide end-to-end development solutions to connect investors with mission-aligned project proponents. Edit Kiss, thanks so much for joining me on today's episode of Developing Carbon Stories. Thanks for joining.
Pleasure to be here.
I'd first like to hear about how you first became interested in carbon markets and what led you to decide to make a career out of it.
Nice question, thank you. So actually, I was just finishing my master's in environmental economics around the time when the EU ETS, the European Emission Trading Scheme, which is one of the biggest compliance carbon markets, just started in Europe. So I get intrigued by that. I managed to actually start my first internship as an equity broker on that topic to develop their in-house carbon fundamental analysis. And and it was fascinating. I think I found it so already within 6 months, I have seen the first roller coaster of boom and bust, because in 2006, when the first verified emission data came out, it turned out that the companies have overestimated their initial assessment. So there was a huge oversupply, so the market crashed. But it didn't discourage me to stay on. So, so I decided to keep on that and started actually with the compliance market side, and then that's through to the project development, the CDM back then, the clean development mechanism under the Kyoto Protocol, and then now the more a little different aspects under the Paris Agreement and the voluntary market, and that came later. But it's I found it pretty fascinating how a new commodity, a new market can be created, and pricing in this important negative externality. And I still believe it's a really powerful mechanism with challenges and opportunities we can discuss later. But it's a very interesting one. So I decided to stay on that.
Yeah, and so was it the compliance side of it, the policy element, or was it more about project development that really got you interested in the space, or was it a mix of all of these things?
Yeah, I think initially, again, as an economist, the project development side, and actually when you go more in depth to industry specialized with it, because it's very different to work with renewables versus nature-based. That's a whole different spectrum, and does require actually maybe even more in-depth specialization. On my side, it was more as an economist, I found fascinating to have something that you learn in textbooks as one of the mechanisms that you could address this kind of environmental issues, that how you see it put in practice. And in more particular, on a personal level, what was interesting as a new starter, like an analyst or an intern, you could get an expert level very quickly because it's new for everyone. So it was actually a pretty fascinating one to be, after a very short time, be one of the experts on the market, and with a very steep learning curve. So it was more on that kind of aspects of it that drew me in, and then later on, indeed, when switching from the renewable or more like the industrial gases towards, for example, the nature-based, that required actually some further specialization. I did a bit of a postgraduate certificate as well on it, on forestry. It opened up in a new spectrum, and I must say that the nature-based part, when it opens up also the other aspects like biodiversity, it adds additional excitement, and I think since then I'm really now focusing on the nature-based segment, which has can be such a powerful tool, and goes well beyond just the carbon economics or trading mechanics and cap and trade systems. So it's much more broader, and can impact a much more broader sectors, other commodities, other land use sectors. So
Yeah, wow. I find it fascinating that you were a part of the market when it was in such a nascent form, in the mid 2000s, being there sort of in the coalface, and then starting at Althelia Climate Funds, which clearly, you were there for quite a while, and it was a very innovative project for its time. I'd like to talk about that for a little bit, if you could, maybe run through perhaps some of the innovations that the fund brought to the market at the time.
Yeah, sure, happy to. And again, I think the context is that also the climate fund and the team behind has been all personally involved on the market under the Kyoto Protocol CDM. So there has been a lot of experience and learnings. But for some reason, unfortunately, for some well-defined reasons back then, the Kyoto Protocol ignored the nature-based sector or the forest sector, and only so the first under the voluntary carbon market, Vera, the main standard Vera, the first credits have been issued in this sector only in 2011. But again, the first CDM project started way before, and I think there was already a very interesting, vision to see that how this could actually work for the nature sector again, which has been left behind. So with Althelia, that was designed as a climate fund. Right at the collapse of the market, actually, when the prices were tanking, but still, again, with the vision to how to deploy this super powerful tool, this carbon finance, into the land use sector, sustainable land use. So we're focusing only on the land use sector and forest conservation, because that's what is the most urgent, to keep the forest standing, the primary forests. Obviously now we have much more broader spectrum, restoration, and all the new segments, which are super important. But back then we had to start with the most urgent one. And yeah, really the vision was to deploy this tool, provide a price for carbon. So back then, when actually prices were collapsing, there was not even a voluntary market, was tiny, was very CSR, so corporate social responsibility and philanthropic driven, to provide a price signal for this nature-based future generation of credits. We had an 8-year closed-ended fund. So that meant that we could, even if it's just more like a floor price, but provide a price signal for that 8 years, which was extraordinary back the time, and had the investment thesis. So we had very visionary investors who allowed us to put a price on carbon and do that as the investment thesis, combined with and diversified with other revenue sources. So the other innovation was to, back then there was already some first generation, early action projects in the space, RED Plus in particular. But nobody has tried as an investment thesis, tried to combine that with revenue streams, for example, from cacao, from sustainable smallholder cacao, which is it makes sense. It's a holistic approach. It's had its challenges and lessons, which we can touch on. But that's what we kind of piloted this production approach as well on a landscape level, which today now it's called landscape approach. Is much more common, or people talk about more broadly. So that was I guess that diversification is also from the carbon away was interesting. We also had to innovate on the financial instruments, because the traditional financial instruments, such as equity and debt, are not suitable for this sector. So we kind of piloted what is called today carbon collateralized profit participating loans, let's say. So it's kind of quasi equity. You take equity risks, but still it's collateralized by carbon, which back then was not, it's a lot of risks. Today, I think the good thing is carbon becomes a proper asset, a new asset class, tradable with a price signal. You can actually, this is a very important collateral. So so it was a more flexible, basically, instrument that was more suitable for this type of smaller scale, community-based or even government-based projects. So the financial instrument was another interesting element. And then, maybe just to touch on, once we had deployed or committed the capital, it was 100 million euro fund, so not a huge, but back then again, providing some support and price signal for this new emerging type of asset, let's call it asset or carbon credit. After that, a few years down the line, we realized that the market was not coming, and how
many years down the line was that?
I would say three 2 to 3 years. So we
yeah.
had 4 years to commit the fund, all the capital. And once we started to build a very nice portfolio of carbon credits, actually the biggest one sitting on back then, it was like close to 30 million tons. So then we realized that we actually have to also do something on the building the market, because basically what happened is almost all the brokers and intermediaries either went out of the market or diversified away, and nobody really held the flag for nature-based segment. It was all a blend, anything and everything, low quality, whatever. And so that's when we created Ecosphere Plus, our marketing kind of subsidiary under the fund, which was a bit of a stretch, but again, the fund structure allowed us, and it was very catalytic, because they basically had the mission, we capitalized it properly, had the mission to work on bringing in new sectors, growing the pie for the whole sector, not just trying to grab some few existing clients on the market. So that required at least 2 years of heavy lifting on building coalitions, working with NGOs, educating the market, the governments, the consumers, different stakeholders. And that started to reap its benefits, and the market started to, I think, turn around late 17, early 18, really.
And so how does Ecosphere Plus, how does that sit within the Althelia Climate Fund? How are the two related, and how are they different?
It's another traditional structure, so it's a bit of it had to be innovative, creative/innovative. It's an investment from the fund, so it's an asset of the fund, which is creates a bit of it's a bit strange in the sense that it's a closed-ended fund that owns the company. The vision was to grow the company, and then exit, to sell the company when the fund wraps up as a closed-ended fund. And initially, really, the mandate was just to obviously grow the market, but sell, monetize the portfolio of the fund. But over time, service the whole market by basically creating a new channel. And by today, we see that there is a plethora of new actors. But back then, it was quite unique to have a dedicated marketing company.
Yeah. Okay. And that was really to address the difficulty in finding finance to back projects at the time. That was sort of
no, to sell the credits. Basically,
okay.
We were financing the fund, so 100 million was enough to build and do our upfront financing. But the investment thesis heavily relied on then later on monetizing. So basically, the investment fund buys you 8 years on the market, but at the end, to pay back the investors, you need to monetize the credits. And we were hoping that will come more naturally, but we had to push a bit harder than initially expected.
Yeah. And so, I mean, being in the space for 8+ years, what were the lessons learned from the fund? What were the key takeaways that have informed project financing now?
Lots of lessons learned, and the fund is now extended another year. I'm sure Miro is working on the exit reports and lessons learned to share with the broader industry, because there are many. I guess one obvious one is probably, we could say we were a bit early. We were a bit early, and really look to think about the climate fund, Althelia Climate Fund being a pioneer that had to do many things that a traditional asset manager or fund manager will not be able to do or shouldn't be doing, but that was really the necessity back then. And then, as I mentioned, 8 years, providing an 8 years vision, like a kind of a vision on the price, or like price curve for 8 years, seemed like a very long time. And even today, to sign an 8-year forward contract is a good one. But when it comes to investing in this underlying kind of nature-based solutions, it's actually turned out to be quite short. So one of the lessons also is, I think, if you look at newer generation funds, there are 15 years for example, Mirova's land degradation fund is 15 years. There are others or at least 10 year plus, and then +2 if you can renew it. So I think the tenor is becoming very clear that especially for restoration, you need a longer tenor. Other lessons, I think, again, we were constantly challenged on whether carbon pricing is the right instrument. And this carbon finance, whether it works. There could be other instruments like the taxes. There are others. We tried everything. We looked into whether a premium and sustainable produce should solve the issue. The market was not reacting to that, or actually the industries don't like that at all. So I think the conclusion is that actually carbon works, and is still probably the simplest instrument. It's very technical, very complex, but in terms of as an instrument, as an international instrument under English law, once you have a contract, you can do a project in Brazil, in Africa, in Indonesia. It's relative. You always have to do some underlying, obviously, due diligence, but it's way simpler than trying to do equity or loan or more complex transactions in very different locations. So it's more easy for me to standardize. Once you have a carbon credit, if it becomes a commodity type of instrument, then you have a common market. So I think, and it's compared to physical assets like, again, cacao, you don't have that kind of same, you have to ship it, you have to have a logistic, it's a digital asset, right? So again, I think it's one of the lessons, it does work. To those who know how to do it, it does work. It's not enough. It's not going to solve everything. I think one of the difficulties with nature-based carbon has been that people thought that it's going to solve everything, everywhere, everything. It's not true. But if you use it wisely, and if it's used as a tool within an impact investing, for example, framework, it's actually very powerful. And provides a very nice diversification, even for the more traditional commodity or private equity or other type of investments. So it does work. I think that's an important one to. Then other lessons, the liquidity, closed-ended fund. If you have a closed-ended fund, self-liquidating contracts or like financial instruments are key. And again, the revenue share loan is a self-liquidating instrument, which turned out to be super convenient compared to more complex equity when you invest in a cooperative or in cacao, and the exit costs are super high and super complex. And that's one of the reasons the fund had to be extended to exit the non-carbon, these more complex assets. So I think that's also an interesting one, and again the impacts of how you can diversify with carbon, and the risk profile still remains different. So what we found from a diversified portfolio of maybe 50% carbon, 50% non-carbon is that the performance risk on the carbon was much lower. What we forecasted, what we thought will be generating or producing as carbon credits was pretty spot on. Where it was more difficult is, as I mentioned, the market was not coming, the price was not there where it should have been. But on the commodity side, or the agriculture or agri-produce side, we encounter much more performance risk. You had so much already climate actually issues, droughts in the Amazon. Who thinks about it, right? It's something that you're not necessarily planning for. These small scale projects all underperform in terms of volume, but then the price, once you have a nice high quality cacao bean, it was easier to sell, right? So that was the kind of interesting to see how you can diversify, but then also you had different risks, and how do you manage it within one portfolio is not super easy either.
Yeah. And in terms of fostering the market for carbon credits, I'd be interested to hear your thoughts about how the role of corporates in funding development has changed during that time as well. From rather than a traditional just buying carbon credits as they're issued, and as they move further up the chain, more towards funding projects, being a part of funds like the ones you're a part of. How has that evolved over time?
Yeah, no, that's a super interesting one. So exactly what you mentioned. First, typically you expect these corporates to buy credits spot, then forward, and we have managed to do, again, through Ecosphere Plus, the first biggest structured contracts with even options and longer dated forwards. But then some of the, especially the big ones that have a big footprint or big demand, or also those that have a trading houses, energy trading, commodity, they know how these markets work. And then it's natural for them to start building their own in-house departments and start becoming themselves, obviously, the providing upfront finance. But even those that are maybe a bit less, not in the trading side. So we have worked with corporates like L'Oreal. That was very interesting to see how, from a pure off-taker wanted to have maybe go closer to projects, more a bit upstream, and even going one step further on the impact investing side. I think that's super interesting to see how corporates stepped up in the space. I would even say that all the growth and that exponential growth has been fueled actually by more corporate and some speculative, maybe financial investors, but not the traditional institutional investors. They're a bit lagging behind, I must say. So it was very good that the corporate stepped in and went up because on the chain, because that provided more capital for upfront financing, which was a big gap. Having said that, we still need to not take our eyes off from the end goal, which is the demand. We need obviously at the end, corporates still play the game, buy the credits, retire them, because if not, it's just a circular. It's going to become a bubble. But I think that's super interesting to see how the carbon fund structures are coming back, which was again very popular during the Kyoto Protocol. Vehicles where you can lend in investors and corporates that gets the dividend in carbon. That's becoming very popular. But also, I think, again, the impact investing, like the L'Oreal Nature Regeneration Fund, very powerful because it's a financial fund. It has a long tenure. It's patient capital because it's very focused on the impact, and it complements super well these companies, other supply chain net zero strategies, because with this kind of funds they can go and have impacts on ecosystems or places where maybe they don't have any procurement or no impact, but still it's a very interesting, and it's a different type of capital they can deploy into these funds. So I think it's a good mix.
Yeah, absolutely. Do you think this is a trend that will continue? Will we see more corporates moving in, or rather up the value chain, like we've seen in those examples, like with L'Oreal, or is this something that was more demand driven, and perhaps as supply potentially meets that demand in future, is this more of a transient trend?
Yeah, it's a good question. I think it's quite a mix, and there can be some theories who should do what. Everybody should focus on what they do best, and I must say also in the impact investing space there is still that what is capacity building, whereas investors, if you look at how the international NGOs are also moving towards impact investing, because the grants and the public money is drying, or philanthropic money is drying up. So it's a bit mixed. I think there is a role for there will be a role for them. I think it's important again to have these companies. At the end, we need the demands. I think that they should obviously focus on that. And if you already identify that, investing upfront, it takes more risks. It means that also you can lower those costs or optimize. So I think it does make sense for them. What I'm hoping for is that the institutional investors that have lagged a bit behind, if they come in, then that will be more important also to go to that true scale, and provide that liquidity and buffer also for the whole market, so that you have also credits that are available on the spot market, and there's liquidity, because if everybody invests up front and takes a credit, then we don't create that market. So I think we need the different actors, and also even the more speculative ones. What we have seen last year also, when they had a big increase in the price, it was driven by some speculative one, and even the crypto, some of the new crypto companies, and I don't mind. I mean, again, what we have a fundamental issue. The carbon is still not priced incorrectly. If you look at the fundamental forecasts, or what would be a true price for this, $50 or plus, we're trying to make this work in an Althelia world at a sub $5, and now we are 10, 15. I think if anything we can have with the price discovery and speed it up, it will help the whole market, and obviously help us to do our work on saving the forests and keeping those natural resources.
Yeah, definitely. Now, the work you're doing at Revalue Nature, how's that different to what you were doing at Althelia? Is it just like an offshoot from Althelia, focusing on a specific kind of investment structure? How does that work?
Yeah, it's quite different, and it's to do with what I just mentioned. So I think there's a natural evolution. So as the market is growing, and finally, actually the market is becoming more liquid, there is more price, transparency, price discovery. we need different actors, or we need the actors to, again, focus on their core and to be able to scale. So typically, Althelia was the climate fund was, again, a pioneer, first of its kind, a first-time fund manager also. So we could afford to do things which a traditional asset manager shouldn't or wouldn't do, co-building the projects, building the market at the same time, and all that. What now the market needs is obviously like Mirova and other asset managers that are in the space, and also more traditional centering is looking to structure bigger vehicles and go to scale. And on the other hand, we need new entrants, and new companies are professionalizing the project developments and bringing these investable deals to the investors. And that's what Revalue does. So Revalue Nature, which is a spin-off from Systemic, so has been incubated there for a few years, actually, already quite advanced, and have a pipeline and all the development processes, design and working on actively that is yeah, with that in mind, was structured to fill in a very important gap, is that investable, yeah, you can read everywhere, like lack of investable deals, and also in the carbon, the lack of investable deals or like business cases has been on the market when we had no price. That was what we had to advocate for, a price, and now the price, I don't think we need to talk about. Of course, as I mentioned, we need to have a higher price. Hopefully it will go to the price discovery and go to the more equilibrium price, but it's also, once you have the price, still it's extremely complex to do these projects. We need to do it right. So the integrity is a big issue right now. Obviously, there's a lot of talk about that, and the scale. On paper, it's a huge sector, and NBS, nature-based solutions, offers a significant portion of the mitigation, and actually cost-effective, so below $100 per ton mitigation opportunities. But to bring that to life from theoretical to a real project, knowing that it involves people's communities, it's not like an infrastructure project that you just put a wind turbine or a plant somewhere in the desert. It's extremely complex. So I think where the next challenge is also lies for the market is to bring these projects to scale, keep the integrity, or actually grow the integrity. And that's where we need more private sector, proper like companies helping those super important work that NGOs and on the ground conservation and community organizations are doing, but simply are not able to do because they are local. And we need also global companies to bring in this kind of know-how and also financial knowledge as well.
Right. So Revalue Nature sort of sits between, the on-ground implementer and the investor sphere.
Yeah, exactly, on the market. So basically, we are a global nature-based project developer, where we have the team in-house technical expertise to do the carbon work, biodiversity, community aspects, but the technical work. Also the investment side. So I'm personally heading up the investment side. And then we also have the tech side, a bit of on the technology side, to make sure we cover also all the new developments and the remote sensing, and that we just a key part of the integrity piece as well. And we enter into partnerships with local implementing organizations who have the boots on the ground, who have been working with the communities, who have relations with the governments, because that's something that you can't shortcut or can't skip. And as a joint venture or as a partnership, then we develop the projects together, and we, from our balance sheet, are able to bring it up to the feasibility stage, where the bar is for the investability. Where as an investor, I haven't been able to look before, for example, to anything that didn't have a feasibility study, and that's when we can unlock, so to say, the broader from the capital from the market, still through our balance sheet. So Revalue Nature is planning to sit in front of the investor, which I think is again an important gap. As an investor investing in these difficult jurisdictions often, or like developing countries, small entities, it's very hard to pass KYC, AML, all those requirements. So Revalue is a UK limited company. So we're hoping that we reduce the burden for the local partners, and also make the investors more comfortable. and compress the time lag, because one of the other problems on the market right now is that investors take too long, rightly so, because they need to do their due diligence and they are regulated, but 6 to 12 months to make a 5 to 10 million deal is not sustainable. And by the time we deploy capital at that speed, we lose all our forests. So the idea is to compress the lag, help to bring the capital faster. That the only ways to do is to provide this kind of new private organizations that can work directly with the investors.
Right. So you're sort of shortening the timeline of investment to sort of suit the needs of on-ground developers and to suit the timeline that they require.
Yeah, exactly. So we will be doing that. And then, I guess the other piece is on the integrity side, on the quality. So we're looking at keep pushing the market on the quality side. As the market grows, it's inevitable that obviously there is more noise, more broader players. So it's important to not go into the lowest common denominator, which often standards have to do, but try to experiment and see how to push the bar. And that's something also, because we integrated, we have our in-house teams on that. We can stand by that quality. We don't need to rely on external consultants, and that's something that we can stand by our integrity principles and design the projects, and then be there for the 30 years. Carry out also the MRV, the monitoring, reporting, verification for the long term. So hopefully that will also, again, give confidence to the investors that we have a skin in the game and our interests are fully aligned with theirs and with the communities on the ground.
Yeah, right. I mean, it's interesting you bring up the concept of integrity and quality carbon credits. What is it that Revalue Nature looks for, when you're trying to find the next project to find feasibility for and find investment for? What's what's the first net that you use when sort of looking for these projects?
Yeah, so that's the beauty as a project developer. You start from scratch, and that's why I think it's so important that the project developers, and again, there is a new generation. There are a lot of also the existing ones. They are all, to work towards high standards. It's super important, because the investors, the reality is, by the time they get the project in front of them, it's, as you say, you need to have some criteria, but you can't really influence it that much. You can put additional covenants and create a more complicated contract on the back end. But I think to again simplify the market and make it more efficient, the projects need to be developed from the beginning, from scratch, from the greenfield. So we don't. So the way we do is we use a scientific and evidence-based approach, which is also again have all the in-house capabilities, for example, on the science, the data science and GIS. Looking at where is the scientifically where it should go, which field you should select. Obviously, not everything is available for carbon development, so you work typically with, again, a local partner. We select a local implementing partner with whom we intend to do multiple projects. So it's also, again, aggregating and systemizing how to go to scale. And there is the first bar is who you want to work with, and it's the main criteria is to be mission aligned, so have as an organization same kind of integrity principles, and then once you have the two pieces of the partnership, then together either there's already an identified area where we can start scanning through the carbon potential using the models, using all the remote sensing and data available, and selecting basically the best places for that, or where the carbon looks obviously promising. And then it's all about your process. So from what is interesting, again, also personally for me, switching from the investor to the kind of project side is really, again, you're closer to the ground, and you start from that perspective, structuring everything. So you start what other communities need, what's the processes, how to structure everything, and you will bring that to the investor, rather than in the past, because there wasn't enough capacity for these NGOs or local operators to do these. Investors, even impact investors, we had to come in and try to help them figure that out, but still you represent the investor, right? So I think the ground up, so we start from the ground up representing the project, that hopefully will result in a much more fair design and fair all that, which market is demanding, that is designed for resiliency and with the involvement, proper consultation, everybody's buying, and only bring it to the investor when it's ready, so you don't get weird discounts or penalties because you are too early and you don't know how to price, the market didn't know how to price those risks in.
And so, I mean, Revalue Nature, nature-based solutions primarily, well, exclusively. And do you find when you're, using that tool for assessing quality, at that early stage, does it tend to favor particular project types? Would it be, afforestation, reforestation projects, Red Plus, blue carbon? Are you seeing that sort of favoring any particular project type at this point, or is it still, quite broad and dependent on other factors?
Yeah, I think it's it's broad because we need a lot of different solutions. But as a company, we also try. Yeah, I think, and also the team, has the kind of same vision on the markets, that if you follow the mitigation hierarchy, actually also in this level, you inevitably start looking at protecting the primary forest. So that's Red Plus. Obviously, there is some movement on creating even crediting for the high forest, low deforestation countries, so more like the kind of a proper conservation play. But let's say under Red Plus, where you have already threats identified, you can do the baselines and calculate the future threats. That's still, I think, the most urgent and also the most limited, because there will be limited jurisdictions, limited spaces available for that. And so I think that's for us a priority. So I guess not a surprise that the first projects in our pipeline will be Red Plus projects, big landscapes, and again looking into how to go from a project baseline to the allocation to jurisdictional. So testing that out. Restoration is super important as well. On a long-term horizon, obviously we need to get there. There are issues for us. For example, we wouldn't do, of course, any monoculture or any plantation type of things. We focusing on the ecosystem services. So we would do always high biodiversity and higher that kind of segment, maybe and not involved in the underlying ourselves in the underlying agricultural supply chains, but we could very well work alongside with somebody who's covering that a cocoa supply chain or something, and we work with them hand in hand. And then so other than that, there are some new developments around soil carbon or around biochar. So I think they're all super interesting and we'll need to do that. It's just we started off with naturally with Red Plus and some of the restoration projects coming behind.
Yeah, definitely. It's interesting that Red Plus projects are obviously quite urgent for the reasons you just described, but do you get many demand signals from buyers and investors looking for removal credits? There seems to be this trend that we're seeing it available from clients and people we're speaking to looking for removal based credits for addressing buying side integrity initiatives like the SBTI principles, looking for removals. Is that something that you've found coming into the projects you're developing?
Yes, I think there has been a lot of confusion around this, and that's have been going in circles a lot. And again, I think hopefully the mainstream or like the consensus is developing around that. You need in a portfolio, you need everything has its right. So we need to have protection, forest protection. We'll need to have removals, especially by 2050 for sure. You should only be removing because you should have removed the threat. Are we there yet? Nowhere near. So I think, yes, I find that some of these new standards and guidance have made a lot of confusion in the market, unintended consequences as well. And I think it has been clarified, for example, under the SBTI that it wasn't meant to exclude Red Plus. It was just meant more for the transition or trajectory, which makes perfect sense on the trajectory. We should be using actually more urgently REDD+ credits in the near term, in the next decade, while we are starting to do the removals, because that's going to take anyway a lot of time to ramp up. So I think that's hopefully clarified. There are some interesting ones as well around mangroves or peat, so wetlands more broadly, where you can actually do restoration, and the restoration results in a reduction type credit, because with peat actually that's a kind of reduction. And so it's sometimes, you know, practitioners or people on the ground find it's quite confusing. We need these credits, we need to them high integrity. It's not about reduction or removal. All of them has to be. You can do a very bad removal credit by planting eucalyptus and damaging biodiversity and not even being additional because you get your money from timber. Or you can do beautiful REDD projects and with the baselines that are conservative, that are designed, you know, you design the permanence around working with the communities and engaging working a landscape approach for full resiliency. That's as powerful as anything else. So I think it's a bit tricky, and I'm really hoping that we get some standardization, because there are too many standards and too many new integrity frameworks that are actually makes the life of actual implementers or people doing the work on the ground extremely difficult.
Yeah, no arguments here. There's a lot of confusion, a lot of standards to understand, especially for the people new to the space. I'd like to get a sense if you have any favored project types in what you're looking to develop over the next 5 to 10 years. If there's particular demand signals for a project type, whether it be, like you mentioned, soil carbon, we see a lot of interest in that. We sometimes get interest in regenerative agriculture as well, which has a lot of overlap with soil carbon as well. Is there any trends you're seeing emerging in that space?
Yeah, I think one of the interesting things is the blue carbon. I think there's a really lot of interest, and rightly so. If you look at coastal ecosystems and mangroves, that actually kind of the intersection of terrestrial and marine, it's super interesting because there are so many benefits. Again, if you do it properly, the flood resiliency with the sea level rise, the adaptation benefits for the communities, for the fishing, for the local population, and all that is super interesting. So the market, I think there is a quite strong signal, even with the current more like downward trend, has been very resilient. Obviously, it might be also to do with the demand, with the supply. It's still limited amount. It's hard to buy blue carbon credits still. So I think there are, at the moment, we do see some spreads which are maybe fundamentally not maybe justified, but there is a strong demand signal, and I think it's rightly so for blue carbon. And there is all the other ones you mentioned. Soil, still I think some more work potentially to be done, but soil and below ground carbon in mangroves already there in the calculations, so that again it's part of those. Biochar is another one, very interesting. A little bit different profile, but the permanence profile as well is also quite different, and the price points are huge, but also because the quantities are tiny. So it's another surprise. So I think it's nice to see that with the prices increasing and the market sophisticating, you have these range of so many actions you can take. Back then, again, just to go back to Althelia, when we started the first projects in more like national park, buffer zone, forest conservation, we didn't even bother to quantify or verify the impact of planting, for example, cocoa trees, or like the buffer zone activities for the removals, because it was tiny in terms of volume compared to REDD+, and the price signal wasn't there. And now, if you have a proper price signal, you can do these more sophisticated one and hopefully drive more action.
Yeah. So the price signal of carbon obviously delivering so many benefits for the market, being able to enable environmental protection and restoration. How can we value other natural assets, in a similar way? We sometimes hear about an emerging biodiversity market. Are you seeing signals for that in what you're doing?
Yeah, no, I think that's super interesting. That should be the next. I'm quite convinced the next one in the broader environmental assets or ecosystem services. There is a huge development also on that in terms of quantification, new technologies. With the emergence of environmental DNA, with the new metrics like the IUCN STAR metrics that has been developed over many years, which is a big development compared to, again, where we started initially. Intuitively, qualitatively, all knew that it was great, but you could have maybe some surveys, some camera traps. But today we can fly over drones. You can, again, have these more sophisticated science-based tools. So with the advent of these new technologies as well and new metrics, I'm quite confident that, yeah, as soon as we have a robust baseline or robust possibility of measure the initial status and then the uplift, then we'll be able to create these new assets, which could be a biodiversity credit. And then hopefully with the TNFD doing the same trick as TCFD did for the carbon, we'll get more nature related understanding companies how they depend on nature, what are the risks, and start reporting their footprint. And that will lead also naturally to trying to put on their balance sheet these nature positive assets, and that should create the demand for this new generation of ecosystem service credits.
Okay, so that would come from a similar way to carbon. You would have people looking to be, I guess you might call it biodiversity neutral. Like in the same way that we have carbon neutral, like would you have a biodiversity footprint, which you would then offset with biodiversity offsets? I mean, actually, as I'm saying this, I'm realizing it brings up this other question of, maybe we're getting too specific here, but like, finding a like for like biodiversity credit, it's not quite, 1 ton of carbon equals 1 ton of carbon. You get different kinds of biodiversity and that kind of thing. How do you see these challenges being overcome? I mean, I know it's very nascent at the moment, but
yeah, no, it's very interesting. I really hope that we can learn from the carbon and not waste another 10 years just arguing about theoretical problems. But yeah, the like for like has been an issue. So biodiversity offsetting is actually quite advanced or widely known and has been around in the extractive sectors. And for really local thing, and that's the problem, is that it has been so localized that it wasn't possible to make it into a market. And I think there is the opportunities with, again, this more advancements on the measurements and metrics. For example, with the STAR tool, it uses the IUCN global red list, and it's able to quantify things on a global level and make it comparable. And once you have a unit that is comparable, then you can start creating a market. The offsetting is difficult. We already see how complicated it is on the carbon side. So I don't think we will get any consensus or to do with that. Okay, you kill some animals here and you protect there, and it's not right. But I'm hoping that where we can go for as a more like as a company level, you can have nature positive. I think will be going for not just neutral. We then now have to go into nature positive. There are these new frameworks how companies can think about how to become nature positive, and inevitably there will be footprints, and then maybe on a balance sheet level you can start investing into nature positive product, like investments, but also the assets underlying them, and create some value for it. But still a bit more work to be done on that side.
Yeah, I feel like we could have a whole episode just on biodiversity markets. But I mean, I'd like to, ask you 1 or 2 last questions, just mainly around for project developers. As a project developer, what do you see to be the biggest opportunities in the next couple of years within the carbon market, that is?
Yeah, I think it's, again, if you look at, zooming out, we are at an unprecedented, opportunity. I mean, we have obviously headwinds, and the macroeconomic outlook is not great. But if you look at the journey and where we have come from, The price signal is where it hasn't been ever. We have forward pricing emerging. We have new entrants. It's becoming clear that you can't anymore ignore the problems around climate and nature and biodiversity crisis. So I think there are huge opportunities to come in and help grow the market. There are a lot of gaps still, which is interesting, and there are, that's why you see so many new innovation happening also from the technology side, all these new players. A lot of some hype around. So obviously, as in every industry, you will see if you shake a bit how much you have to shake the tree and who stays. But there are a lot of opportunities, and I think that is encouraging to see so much. Once you get the private sector, once you get the innovation, we can solve the problems, and we were missing that in the past. We were it was just development, finance, grants, NGOs. That's unfortunately not scalable. So so I would encourage new entrants, bringing all the minds we can bring, because the problem is huge. There is enough business for everyone.
Yeah, I mean, that's a very uplifting note to wrap up on. You taught me so much. I've learned a lot during this episode. But thanks so much for joining and running us through what you do and how things have changed over the last 20 years. It's been great to hear from you.
Thanks a lot. Very much enjoyed the conversation as well. Thanks again.
Cool. Thanks, Edith.